following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back. Missed Friday. Had some legal matters to take care of. And, wow, a lot's happened since I left. And got a little British Open theme going on today. Got my TaylorMade hat on. Don't have TaylorMade irons or drivers or anything, but getting ready to get some, I hope. God, man, they make some great clubs. Ooh. I was using a friend's TaylorMade over the weekend. Set of irons, burner irons, unbelievable set of clubs. So British Open, if you haven't been keeping up with this, or maybe you don't care, had some weather issues, and they're actually playing the final round today on Monday. So if you could catch it, it's a nice thing to watch, to say the least. And that kid Spieth, man, 21 years old. I remember I was a complete unorganized idiot at 21 years old. This guy's getting ready to possibly win his third major in 1 year, which just quite amazing. And there's an amateur leading the tournament right now, so that's another amazing facet of what's going on here. What we're going to do initially is we're going to take a look at some of the, obviously, the usual suspects that are being moved around by some of the fundamental events going on. Let's take a look at the Euro first. And, we talked about, this, being the ultimate short, in my opinion, selling resistance any chance you get. There's really no reason to take this trade off at this stage. I don't see, anything really in the way here. We had that big close below weekly unfair lows, 109.49. Now it's going to be kind of snap back, close below, go back and retest, and that will be the ultimate selling point. You do have, as a regulator of the trade down, these 240s on the euro. Really, if you want to scale out of some of it, that's okay. We've had a new 240 profile up here. I think the worst case scenario that this might go back in your face on the rally side is up into that 109.48.49, and then I think you've got to possibly say uncle above there based on your appetite for risk. But right now, again, here's the long term. The weekly close below the profile. Daily, we're below profiles, and there's no new profiles attempting to appear. So, again, I think we're still spot on short with the euro on the long term. On the short term, you've obviously got some shorter term inflection points to pay attention to, and those inflection points on the 240s are 108.26 and up top 109. So 109 is the short-term resistance. That 109.50 area is going to be longer-term resistance on the euro. And as we go into the scanner, I'm going to pull this up really quick. I'm going to go to our currency grid. And if you guys are seeing this, we're going to look at EUR USD right there. And as you can see across the board, red, got that little peel back happening. A little bit of a scale out short-term situation there. Possibly there's those inflection points we just spoke of. And there's that 109 general area. And on the 60-minute, we're passing above profiles, but I'm going to just call that noise on the long-term trade down. We got to look at gold here. Man, how do you trade this now? We talked about staying away from this on the long side. And here's the long term. This is the August contract. This is our weekly profiles breaking below. It's kind of okay to be short, not okay to be long there. And here's the daily. So we never even really got back and tested it to the tick up there on the retrace up to 1170. Got really close about a week and a half ago. Rallied as high as 1167, so got within $3 an ounce of that, kind of closed below, come back and retest. But overnight here we've had some volatility, and this is a great example of why you need to put stops in. Here's our 240, and what was that? That was a 1131 down to 1080. So you had a $50 an ounce move down in 1 hour. And this is why you try to let the market come to you. You try to block out one side of the marketplace. There's really been, and this is our 240-minute view, there's really been, I mean, if you follow our methodology and you just try to be patient and wait for these profiles to kind of allow you to pick battles, if you notice here, even as of July 17th, which was Friday, and I wasn't on the air July 17th, there hasn't been anything to hang on to here to try to pick a battle on the long side. And by the way, even after that washout and the consolidation here, there's still nothing on the time frames that we look at. So again, is this time to nibble on the downside? Here's our 60-minute even. No. I mean, look at that. We come back into resistance even on the short term. There are zero breakage of profiles on the upside, even on the shortest time frame, to really start looking at this yet from the long side. Now, some of you guys out there may have, around 1100 bought some, and maybe you took $20 an ounce heat in the wrong direction, and now you're up to whatever 1115 or 1111 where we're at right now. This is real time. God bless you for hanging on to harrowing situations like that. But if you want to play the odds game, trading this thing on the short side still is more than likely the flavor of the day here, and the flavor of the longer term. Again, remember, you don't have any contra bars down here on Navigator. This is something that will turn darker red. And as you see, lower lows on Navigator. There's no divergences going on here. Here's our long-term weekly. A little bit of a divergence there, but again, we don't have any new profiles that are kind of validating any type of areas to try to start mitigating that short trend down. So right now, this is still not time to buy gold, actually. All right, let's look at the S&Ps. This is something I just want to start getting into immediately. And man, the Shanghai had some crazy moves here. All right, so last week we talked about if we get a close above 2104, and again, this was kind of Custer's last stance for any battle picking on the short side based on going into our scanner, look at our global index grid. Here's the S&Ps right here, still showing a weekly breath, just timidly still negative, but and let me just point this out here. I'm sorry. We get to the right chart. It's Monday morning. 2104 was kind of Custer's last stance on the short side. We talked about if we get a weekly close above that area, that's pretty significant. And then we're going to be looking at this breadth situation, which has been a little bit of a guidance tool. We've opted out on a lot of long opportunities based on the breadth, guiding us before in the right direction, waiting for inflection points to be migrated to be able to pick battles. This is a situation where now and again, we talked about some winning trades, the euro and the gold situation. And there's quite a few other trades we've talked about that have gone in our favor. But this is a good example of something that hasn't cooperated lately. Stops had to have been hit, in my opinion, if you've been playing this game. And now you got to just kind of sit tight. Now you do have something up here. We're sitting on all-time highs. We've got an inflection point there on the daily. This is a little bit of a harrowing situation because things on their highs want to go higher, and we may just bust up here just to do it. You may want to sit tight here and wait for this to possibly do a reversal before you start looking at shorting below 2122, which is this inflection point. I'm going to pull this up and go into my futures area and go into the S&Ps there. And see that 2122 there, and we're sitting at top of the profile, telling you right there, giving you the inflection points without even having to look at the charts. And there's that 2104. So, you know, we've closed. We're past the 1 key here on our bar number, which means we're into our second week above that profile now. But we're sitting at a little bit of a resistance points. We may move higher. And if we get a reverse down back below 2122, that may be a little bit of an opportunity to short. And why am I talking about shorting? Because we've still got some mixed up breadth situations. But again, I mean, we may move higher, and I'm just going to sit tight on that concept. Okay, so let's take a look. Something else we need to pay attention to. The Shanghai situation. Volatile as heck, got above 4,200. But remember, what we're waiting on for this is that migration back up to that maximum resistance area now, 4,206. That hasn't happened. So we're still kind of sitting tight on any type of new shorts on the Shanghai. All right, let's take a look at the Japanese yen. This is something else along with the dollar. It's been a very fun situation that I've been talking about here. Here's the situation on the yen. Talked about trying to find areas to pick battles on the long side with this. And we're really happy to see that last week we consolidated above, broke stride on the profiles again, and we're able to use the 240s to regulate this up after we had started looking for, you know, we started waiting until we got back up into the balanced area back on July 10th. And then we've been just kind of letting the 240s regulate the trade up after that. And as you can see, stops could be put in on the dollar, 123.75 down below, anything below there based on your appetite for risk. But as we, you know, kind of see here, we're starting to trade above profiles even on the short term again. This is kind of the collection area for me on the long side with stops below 123.75. And that's just the way I'm looking at that. Now going to the dollar. Getting back above 95.30, that's been awesome. You picked up almost $3 full here on the U.S. dollar. And here was that telltale sign getting above 96.93. Let's just call it 97. Where does this thing end? We've got a recent high here we're trying to overcome. Things on their highs go higher. Here's the 240. There's the support. There's the breakouts. There's the breakouts. Here's support on the short term, U.S. dollar, 97.60.61. That's what we're looking at here for the U.S. dollar. When we come back from break, we're going to take a couple of glances at some other usual suspects, get into some stock. Earnings season coming around again. We'll be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Somebody's telling my golf screen's getting washed out back here. Don't know why that's happening. Anyway, we're going to move on. Let's take a look at oil. Let's just get all these things out of the way that everybody's trading here. And where are we at? Where are we? Here we go. All right. So, everybody's happy Iran's going to release a ton of oil at some point. And, there's almost 100 million people in that country. I didn't know that. I didn't know Iran had that big of a population. And I forgot a very high percentage is less than 26 years old. So you got, you guys have probably been reading about this. You've got just like the Philippines. I mean, the Philippines got over 100 million people. And I want to say 70% of the population is less than 25 years old or something like that. So you've got progressive thinking, and you've got thinking that wants to take advantage of the latest modern ways of doing things, and those are people not stuck in the past, and there's a thirst for knowledge, and that's a touchy situation. But the bottom line is that much oil released onto the market, almost guaranteed, is going to be some kind of heavy ammo on top of crude prices. Not that and that's been kind of going on for a little bit here, but the fact of the matter is, technically, and I'm summarizing something that's a very long conversation, by the way, 5150, 5149, we closed below. We've kind of gone back and kind of not been able to get through that area. This is the daily situation. Here's our weekly. And again, most recent lows on this contract are at around 49 on the August contract, but some of these are going to in my opinion, probably going to be pierced now. But here's the stop-oriented situation on crude oil. Above 51.50 on the August contract, you probably got to be looking to sit tight. If it rallies in your face more, just sit tight. You've got that 54.22 up top. But remember, stops, you may want to get back in the water, so to speak, below 51.50 again if you get stopped out on crude oil on the short side. I don't see any reason to start going long this. Now, if you must go long, you probably want to wait until we gravitate above 51.50, and that's your opportunities. But down here, it's kind of okay to be short, not okay to be long. Here's the short-term, very thin profile, which is scary, because when these happen in a downdraft, these are kind of consolidation situations, and this is also relatively bearish. This is just kind of throwing in my 2 cents on kind of seen that movie before so many times, and trying to put the probabilities out there for you. 10-year, this is quite amazing, actually, and we've been talking about trying to find areas to go long this. The last time we talked about this, 125.13 down here. It's worked out quite well, but what do you do with it now? That's where intermediate stops should be had. This is the 240 situation on the 10-year. You know, I kind of think it's a no trade right now. I'm a little bit more biased towards the long side, and long-term putting the stops below 125.13 is more than likely in order for this one. So that's kind of the way I'm looking at it. We're going to take a look also before we get into the next break. We're going to take a look at IBM. This has got earnings coming out. Rising tides lifts all boats, huh? So here we go. Friday, big day in this stock. Got the earnings coming out. What do you do with this? We're kind of past some areas of resistance here. If you're going to short this thing, and with earnings coming out, my opinion is markets look to the earnings on this stock still heavily. You got to sit tight. 176.30 is going to be a little bit of resistance lit on this on the long term, and we talked about that 167 number quite a bit. But what do you do with it? You got to wait till these earnings come out. We've got a profile that appeared below price action on Thursday on this, well below. Remember, that's a very bullish sign. When that happened and we were at the top of a previous profile, that was a very, very bullish sign. If you guys were watching that as it happened, that's a great, great sign. And here's the 240. So, again, the situation on IBM is just sit tight, and the inflection points to be aware of are that 176.30 and down below 169, and even lower 167.35 to try to trade off of that particular instrument. We're going to be right back after break, guys, and start covering some individual stocks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Thanks for coming back. Just a couple of things before we start getting into stocks. Man, JP, how do these guys still just pay fines, and keep breaking the law? Immoral, JP Morgan. Insane. Just keep reading stories about this company. Yeah, exactly. And here's the situation on the long term. Oh, all-time highs. Oh, great. So what's that thing that Gordon Gekko said? Greed is good. Greed clarifies. All right, so let me stop reflecting. 68.81, unfair highs on the weekly. That's your long-term support on JP Morgan. And that pretty much coincides with that daily unfair high at 68.39. So, again, XLF stock relatively strong. The reason I brought it up is because regardless of what's going on with all the mental slants that I have on JP Morgan in general, a strong stock in a strong market, when it pulls back to support, there's that 65.27 area. There's our unfair lows on the weekly long term. You've got to be willing to step in and at least block this out of your short list. And if you're long-minded, wanting to find stocks that are hanging in there in a downturn, you've got to look for stocks within the scanner that are sitting on the bottom. All right, now, what I did here leading into this kind of scanner talk is I pulled up stocks that are trading below profiles on the weekly, below profiles on the daily. And I'm just looking for some ideas because we've run up pretty good here. And there's actually quite a few stocks, and this is kind of proving out some of this breadth situations that we have here. We might flip up a little bit here. This is really amazing that the long term has not flipped over. Incredible, actually. a telling sign possibly. But, we're looking at situations, Aflac, Alcoa. I mean, I hate to keep beating this one to death, but let's take a look at Alcoa. You want somebody told me a long time ago, successful trading is supposed to be boring. If you want the excitement, you will ultimately pay for it. Here's the boring situation. Earnings come out, stock doesn't want to move. It's a $10 stock now. When we were talking about it before, breaking stride, it was 15, if you remember that. It has been actually higher. So there was the first situation around 15, the breakdowns in the profiles, and again, we're just kind of back in motion here. And who would have thought, guys who were doing the dollar cost averaging, we talked about that. Wait for these things to confirm and start, coming to you on support areas or breaking out and breaking stride on the pattern. We had that happen back there. It was okay to play around with these areas, but since around 15 on that weekly breakdown, this is, again, the gift that keeps on giving and giving you areas to sell. And you're going, God, should I short a $10 stock? What's in it for me? Again, you got to keep turning the rents the same way, put the stops in. Just another good example. Let's go back to the scanner. Aflac's been on the screen. AFL. Let's take a look at this one. Now, this is kind of cool because we still haven't been able to get above weekly unfair lows here, 61.86. This is nice. Last week we kind of poked our head up and got the close. Let me see where we're at here. Pre-market 61.59. I mean, I like this situation in Aflac as a short. I probably want to start looking at my stops above 62.70 on this. Just give it a little bit of room to wiggle around in case the market goes higher. But, these are things that are coming up on the scanner. You got some inflection points that we've gravitated to here. Let's take a look at AMAT. I'm just going down the A list. There's quite a few stocks meeting this criteria that we just put in on the scanner. And, had the bottoms signified on the scanner last week. I was looking at this. I can't believe this sold off $2 since from last week's high to low. Jesus. Okay. And here's the daily situation. So again, these are weak stocks. These are stocks that are not on sale. Just reading some stuff here. Okay. Let's take a look at the scanner again. Let's just get out of the A's for a second. There's Avon Products, still piece of crap. It's not on sale. Might go out of business. Baker Hughes, BHI. CBS Corp, interesting. CBS, let's take a look at that one. All right, so these are ones that are pretty far away from profiles. There's not a lot that, if you caught these early, that's great. The scanner would have put them on your radar screen. Let's do a sort of things that might be on the radar screen now. Let's just look at CSX Corp, CSX, sitting at weekly unfair lows, trading opportunity for sure. CSX. All right. This is one, again, has been on the short list for a while, but this is one that is very interesting as the market's doing what it's doing in general. 32.41 stops above there based on your appetite for risk, along with this DMZ 32.70 on the daily. Something's wrong with this company. Something's wrong with this stock. Regardless of what the fundamental news is, technically speaking, it's showing its hand. These may be short opportunities. Comerica, we talked about that. CMA last week, still, not painful as the market has risen significantly. Not been a painful situation to be in on the short side, no matter how you look at it. Diamond Offshore, ugly situations, and no reason to start nibbling. That's another thing. The beauty of the scanner is there's no greens on these stocks. I mean, there's just, it'll let you know. In fact, if you want to do a sort, let me just kind of kill this. If you want to do a sort that just tells you when things are turning. So if I want to say, okay, what's been beat to heck below the box, terribly bad below the box. Please do that. And then let's see what's starting to turn on the 60-minute. All right, and let's just kind of load this up. These are ones that are starting to nibble turn on the north side that we're getting beat up. So these are stocks that, could reverse and is starting to show you signs. There's the one there, ADT Corp, BHI, Baker Hughes. There's the one there, Healthcare REIT, HCN. There's another one, Norfolk Southern. Let's take a look at that one. Western Union, ExxonMobil Corp. These are things that are just starting to pop their head up and may get that head whacked off. Let's take a look at Western Union, WU. So these are ones that might not be the best short candidates out of that below profile on the weekly, daily. Okay. All right. So Western Union, I got to tell you a story. I've paid some people via Western Union, like emergency-wise, from here to there before. If you do that often enough, to the Philippines and just didn't want to go through, just people needed some immediate money that worked for us there. Just letting you know, if you eclipse a certain amount, they're going to put you on a IRS watch list. Western Union is, and that puts you in a whole different world of possibilities of getting audited. So if you're sending money overseas, you're already subject to, funding terrorists or whatever, but you're also getting put on an audit list for the IRS. So watch out for that, and they will stop you from sending money at some point if it eclipses a certain amount. And I'm a terrorist. I fund terrorists. So here's the situation on Western Union, but got some green shoots kind of appearing here. Remember, the 240s are the regulator down. I'd stay the heck away from this stock on the long side. I don't care what it's doing. But, some green shoots. We're up this morning, 1940. So starting to break stride a little bit. Guys who are wanting to take on some risks. These are stocks that are possibly turning, but I don't really think so. Here's the situation on Cummings, CMI. Let's take a look at that one too. Terribly bad situation here. I love this. Similar chart pattern. That's the cool thing is you put in things on the scanner, you're going to get these similar chart patterns meeting what you want to see. And this thing cannot get out of its own way. Relatively expensive stock. Unfair lows, 128.57. That's where you probably want to orient some stops into 130.25. Had an ugly day on Friday. And we pulled this up because it started like the 60-minute was doing that. But again, you've got some short-term selling areas. You've got 130.59, 130.25, and 128.57, a really serious lid on this stock. And that's where stops can be oriented above. And those are all coming from the scanner. All right, so let's get rid of that. Let's go back to no sort there. Let's just kind of cruise down the list here. Let's take a look at ExxonMobil, XOM. I saw some stupid woman that was on TV the other day talking about this was her pick of 2015 or something like that. I was just like, are you out of your mind? And she was actually doing technical analysis on this stock to make that decision. Now, this is our weekly situation on ExxonMobil. See that the scanner, bottom, top, putting those types of criteria in, you would have got the resistance areas of a stock that's continuing to stay in a downtrend, get into a resistance area to sell in the long term while the market is drifting higher. And that was a pretty serious drift we did back down in the market in general. So what do you do with it now? Now we're sitting below profiles. And 83.76, we need to get back above there. And 83.76 coincides with 83.36 to even think about going long this stock. This stock could drift another 10 points lower in a heartbeat. All right. especially if the oil situation gets a lot uglier. This is one that's been leading, the XLE down. So is it time to buy this thing? Absolutely not. Getting back above and a close above 83.76 will be just well in order here. But the scanner is basically telling you with, I think it's on the list here. There it is, ExxonMobil. It's basically telling you to stay away from this on the long side till some of these conditions change. There's Western Union, Schlumberger. There's no mystery to what I'm telling you right now on these oil stocks. Let's look at NetApp, NTAP. Actually, let's don't look at NetApp. Let's look at MCHP. MCHP. Just putting some ideas on the radar screen here. All right, so again, not cooperating with the long-term market trend that's happening right now. Any type of, this is a very, very nice setup right now. Any type of market pullback will just more than likely have some people throwing up. This will be a great short-term little opportunity on the short side, in my opinion. And I know this thing's come down, but remember, market relative strength, relative weakness trading, this one's on the radar screen, and stops above that 45 general area are probably in order. I think we're opening this morning around 44.34. Is that true? Nope, we haven't opened yet. I like this one. God, I'm licking my lips, actually. Take a look at a couple more. Kohl's has been on the list. KSS, I'm sure. There we are, GPS. This Kohl's and GPS, KSS and GPS. These are ones that have been on the short list for a while. No pain. No pain if you're wrong on these. If you're wrong on a market drift higher type situation. Kohl's, very nice setup. Scanner picking right off above 63 stops. And if the market can come down at all, this thing could come apart at the seams now. Man, it's like a no bid situation lately on this. My God. Love it. GPS. God, man, these are ripe opportunities on the short side. Whew. 37.88 stops above. Gap stores. Man, beautiful. Wow. Lovely situation in those two stocks. Halliburton, got some earnings coming out with this. Got to stay away from that right now. Kinder Morgan, KMI. This is another one. Jeez. Oof. KMI. Oof. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Hope you guys got the British Open in the background going today. It's going to be very interesting to see if Jordan Spieth can get his third major this year. That kid is unbelievable. Looking at gold here, a couple of comments about this. I got a couple of emails actually while we were talking. Again, we've talked about, is it time to nibble on this? No. I don't care if this thing rallies $20 right now. You're trading against the odds. Here's the long-term weekly. Below profiles, the generic rule, okay to be short, not okay to be long when situations like that happen. Here's the daily. Even with the rattling around here, there's no new profiles attempting to appear. And I'll go on the long term, I'll go back to my futures in the scanner and I'll just pull up gold here. As you can see, there are no orange peelbacks. That signifies that there may be a change in tone, a new profile attempting to appear. See there on the FTSE, we've got a new supply area happening or starting to happen there. On the daily, there's corn, new supply happening on corn. There is no new demand happening on gold right now. All right, gold may rally, again, $20 an ounce, but you're playing against the odds on this. And this algorithm is telling you right across the board, here's the situation on gold. Probably not the best time in the world to nibble. Here's the 240s. As you can see, scanner told you, just, this thing may fall apart even farther. And you had a $50 an ounce run there earlier. This is just on the downside. And, obviously there's going to be some dead camp out situations there. But right now, and here's the 60. This is kind of proof in the pudding. We kind of ramped. We got a new profile up here on the very short term we never really talk about. And that's been a what? a $30 bounce from the lows to the highs in a very short time frame, but caught that unfair high. That's a telltale sign, not wanting to break through resistance on any time frame that we look at. And we could go back easily and retest at least 1096 on this. But the good news is, I think you can, even on the short term, if you're in there trying to mix it up with gold right now, short-term stops above 1117.5, and just let this thing maybe put a target 1096. That's a pretty good risk-reward scenario in itself. Looks like you had about a 3-to-1, 2.5 to 3-to-1 there. So that may be something to pay attention to, and also keep monitoring in the scanner whether we're going to have. And this is pretty cool. You can do this. I'll just show you really quick. Let me go back to. Let me go back to our dashboard, and let me put in when new boxes are attempting to appear. So what we're doing here is we're saying, okay, and you can set gold up to do the exact same thing. Show me when we're having new supply attempting to appear up top. Okay, and this is pretty interesting because as I go into my daily breadth charts, and we did a webinar on this so you guys could review this type of logic. We've got 38 stocks in the S&P attempting to form new profiles, which will actually change this breadth. It's not significantly, but when you start getting above 10, 12% here, that's indicative of a market change in general. You get all this information in real time. But going back to the concept of gold trading, let's go back to our futures grid here. Just see nothing here on gold that will give any indication right now that it's time to start nibbling in any type of large way. You guys stay tuned. Larry Pezzavento's next. I'm going to keep the British Open here in the background today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.